Hello everyone, welcome to part 3 of Accounts Receivable Management. As I previously mentioned in part 2, we will be looking into the technical aspects of calculating accounts receivable based on available information. There are 3 key calculations we'll be looking into today. First is the cost of financing, second is the accounts receivable period, and third is the early discount settlements. The cost of financing is a straightforward formula. Let's say the accounts receivable balance is $1,000 and the bank interest rate is 5% per annum. Then our annual cost of financing is $50 per annum. So it's a straightforward computation which is commonly used to compute what's the finance cost for the company in providing a credit to the customer. The second calculation is again a straightforward calculation where we are computing the credit period. Let's say we are providing a credit of $1,000 to the customers. We compare it against the total annual credit sales, which is in our example $5,000. So we take the current outstanding accounts receivable balance, which is $1,000, and we take the overall credit sales, which is $5,000, and then we multiply it with 365 days in a year, and this gives us the average accounts receivable collection period. So that means if I sell the products on 1st of January, it takes me 73 days, which is almost around mid of March, for me to collect my receivables. That's the average calculation, and this is one of the key credit limit, the time limit, which will be decided or computed based on this formula. And next we move on to the early settlement discounts. So as the name suggests, this is an incentive we offer to the customers for paying the receivables ahead of time. If, for example, in our example, we saw 73 days, we might offer maybe $10 worth of discounts for paying them back in, let's say, instead of 73 days, let's say in 70 days. If you pay me in 70 days, then I'll offer you $10 worth of discounts, which is still not too bad from a customer's perspective. They will definitely be willing to take advantage of the discounts. It will encourage the customers to pay back early. It will also help us as a company to reduce the amount tied to receivables, and therefore it will shorten the collection period. It's a win-win scenario, and it's a balanced approach. And thirdly, it will also reduce the default rate. Will ensure the customers are motivated to pay back the debts rather than falling overdue. When we evaluate an early settlement discount, there are 2 key components that we need to take into consideration. On one hand, it's the annual cost of the discount. If I'm offering a discount to the customer, it comes at a cost, and we compare that cost with the annual cost of the bank interest rate if the credit period was staying as is. So let's take a quick look at the example and the formula and the example. It's quite simple. The early settlement discount formula is 1 plus the discount amount divided by the remaining amount to the power of number of periods saved. The number of periods which is saved is equal to the total number of days divided by the number of days received in advance. So there's a very simple example here. So let's say the discount provided is $10 and the remaining amount collectible is $90. Now, using the formula, we can compute what's the annual cost of discount. So in our example here, the annual cost of discount is 23.46%. And now let us assume that the annual cost of the bank interest rate is 25%. then it would be beneficial for me as a company to offer the discount to the customer, because the cost is only 23%, 23.4546%. So it is still beneficial for me to go with the early discount settlement rather than me paying 25% to the bank on an annual basis. So that's kind of a simple mathematical calculation which helps me make a decision as to which path to uh, approach the accounts receivable management. That brings us to the end of accounts receivable management calculations, the technical aspect. Next chapter, the next part of the series will be covering on the factoring aspects. It's a key topic under this under this subject, and we will be looking at the factoring services and the process, and the calculations again. What are the typical factoring arrangements, and how the organizations will be entering into these factoring arrangements with a factor, and what are the benefits and the downside to factoring arrangements. Until then, thank you so much, and I hope you enjoyed this session.